Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to start by pointing out that McDonald's is loving Bitcoin. They are of course accepting Bitcoin, and I'm sure this is adoption that we will continue to see. Meanwhile, in Portugal, not so good news. Bitcoin gains are going to be taxed 28% if you hold for less than a year. So this is a complete 180, a complete about face from Portugal, as Portugal has for many years now been a crypto safe haven. So this is something that I do not like to see. However, $47 trillion banking giant BYN Mellon are going to offer Bitcoin custody services to clients. So is this the next step? Is this what we're going to see? Banks have realized that they cannot stop Bitcoin, they cannot ban it, so perhaps they can just try to custody it. Perhaps they can just try to allow people to buy their crypto and then give the keys to the bank. To me, there is no point in doing this. Bitcoin is the ultimate bearer asset, and you should indeed bear your own asset, and you should hold your own keys on a cold wallet. However, this will at least bring in some money into the Bitcoin space, a lot of money in fact. And in the real world, I also figure that just a lot of people can't really be bothered to go through the security processes of holding your own crypto and taking full responsibility for your own money. So I guess there is definitely a gap in the market for this, for custody services. However, remember, if you do not own your own keys, then you do not own your own coins. Over in Brazil, over 12,000 companies now hold Bitcoin and crypto. This is absolutely massive. So this is exploding over in Brazil, and we are continuing to see this sort of trend. Of course, today is the kickoff of Bitcoin conference in Amsterdam. Usually out of these conferences, big news is released, so it'll be interesting to see what comes out of here, if anything at all, over the next couple of days. They usually, in my experience, they like to save some sort of big reveal, big news for the end of the last day. So I wouldn't be surprised if on the 14th we get some sort of major update or big adoption or something like that. So all eyes on this space over the next couple of days. Google, how it started. Google will ban cryptocurrency related advertising, going back to March of 2018. And how it's going now, Google selects Coinbase to take cloud payments with cryptocurrencies and will use its custody tool. Do you understand the magnitude of this? Google is moving in on Bitcoin and cryptocurrency. I've got this right here from CZ of Binance. Google accepts crypto. It absolutely does. Check this out as well. Google say they're going to use Coinbase Prime for institutional Bitcoin and crypto services. Do you know the amount of money that is about to flow into this space? And crypto addresses are now searchable on Google. Look at this. You could just type it straight in, and they've got their little widget or whatever. I'm not sure the technical term for this. I don't think widget is right. But they've got it built into their search engine now. So you can check on block explorers and things like Etherscan. You can just type an address in, and there it is, searchable on Google. This is integrated. Over in France, they've spent 100 billion euros between 2021 and 2023 to fight inflation. They are literally fighting inflation by printing more money, and of course this is the only option they have. There is no other way around. Even though this doesn't make any sense, this is not intuitive. The only way they can prop this Ponzi scheme up is by printing more money and making inflation worse. This is why fiat currencies are designed to go to zero. This is why we can say with certainty these fiat currencies will go to zero, and this is why we say you better opt out of this system, of this Ponzi scheme. You better buy Bitcoin and of course gold. Meanwhile, pension funds are calling on the Bank of England to continue buying bonds indefinitely. Remember this, indefinitely. The pound is going to zero. No fiat currencies are safe. Bitcoin, however, continues to make new highs. This is the difficulty adjustment at an all-time high. It has never been more difficult for a miner to find a block, meaning it has never been more secure to keep your money inside the Bitcoin database. Remember, volatility is expected this week. We know that we're about to get a PPI reading and FOMC today, followed by CPI tomorrow. Make sure you trade safe because there's going to be volatility incoming. I believe the market is on the wrong side at the moment. I believe that we are going to resolve to a cycle low, as I've been saying for a while, at the end of this month, and then I think we're going to have a very, very hated and painful upside rally. The puts just keep on stacking. Traders, retail continue to stack hedges. They continue to bet on further downside. I just don't believe we're going to see massive downside The aggregated puts on the S&P relative to calls have now made a record since 2013. It's the highest level since 2013. This is going to result in a massive short squeeze. It's just a matter of time. We just have to get to the end of the month so we can find this cycle low, and then you're going to watch a lot of shorts cry and a lot of people that sold the bottom wish they hadn't. The puts continue to build. Look at this. Look at this. This is the highest level. I mean, I don't have any words for it. Look at this. If you think all of these people are going to be right, if you think that's how markets work, then prepare to cry. Okay, this is fuel for a melt-up rally. This is not 100% of people in the market about to make money, believe me. And the S&P fear and greed, look at this, we've got divergence. The fear and greed is making a higher low whilst the price makes a lower low. This is of course indicative of trend exhaustion. And speaking of divergence, we now have a higher low on Bitcoin and a lower low in the stock market. Bitcoin is just got a trade. Look how close we are. We're going to get into November, find this cycle low, and then we're going to go. I'm sure of it, as I keep saying over and over again. Here as well, you can see from Stock Money Lizards, we have Bitcoin into trendline support and an oscillator showing exhaustion of this move. We are about to flip bullish and we are about to move to the top of this range. Bitcoin has spent a fifth month now officially around 20k. As you can see, we are getting towards the point where we have spent enough time in this zone before we can start to emerge from here. I think it's going to happen. We can see here as well, Paul Tudor Jones. Look, in a time where there's too much money and fiscal spending, Bitcoin and Ethereum will have value. When prompted by the interviewer, and is that a value much higher than where we are today? Paul Tudor Jones replies, oh yeah, I think so. These big boys are starting to understand that Bitcoin is a debasement hedge. The cat is out of the bag. And a lot of people still like to look at this chart. This is global M2 supply, the money supply in blue, and gold is Bitcoin's market cap. A lot of people like to look at this and say, yeah, well, how can you call this an inflation hedge? That's not an inflation hedge. It's down 70% from its highs. Well, to say that is to simply hold your hand up and say you don't understand monetary debasement or how hedges work. Okay, to say that is to simply point out that you have no knowledge or understanding of Bitcoin, because anyone that can look at this chart, there are multiple ways of measuring this and they all show you the same thing. As M2 increases, as they expand the money supply, Bitcoin's price moves north at a rate significantly higher than the M2 supply. It always has and it always will. We are coming back down to the levels where we're about to see printing. We're already starting to see printing from places like the UK. Make no mistake, when the printers come back on, and they will very soon, the Bitcoin market cap is going to do what it always does and outperform. The media, the narrative is slowly starting to shift. We're seeing things like this. The Fed will be forced to slow its rate hikes as risks for a financial accident grow. Side note, what's a financial accident? That a new term. And volatility in bonds nears pandemic levels. The US Treasuries are in trouble. Is the Fed going to continue? The Fed can't continue for much longer. Scrolling down here, you'll see that everywhere you turn, the biggest players in this $23.7 trillion US Treasury market are in retreat. From the Japanese pensions to life insurers to foreign governments and US commercial banks, where once they were lining up to get their hands on US government debt, most are now stepping away. There is no buyer for these bonds. Why would you invest in a treasury which gives you 3 to 4% yield in an environment where inflation is 20-odd%? This is ridiculous. There is no buyer. The central bank is going to have to be the buyer of last resort, as it always is in this Ponzi scheme. And now that the Fed has everyone convinced it's not going to pivot, the pivot will slap even harder. This is not a matter of if, but when at this point. It is coming, and it is coming soon. Overnight, the yield on the 10-year US Treasury hit 4% for the first time since April 2010. When the yields rise above 4.014%, it will be the highest since October 2008. At that time, the national debt was under $10 trillion, and now it's over $31 trillion. There is a financial crisis on deck, and the only way to service this debt, the only way to manage this 31 trillion of debt, the only way to prop up this Ponzi scheme is to print more money. Believe me, printer is coming. Taking a look at gold, still holding a short. A move back to this trend line and a rejection wouldn't be out of the question here, so short and strong continue to push. Let's take a look at the dollar. The dollar, is it going to roll over? I don't think we're really going to get any decisive moves until we've seen CPI tomorrow, so all eyes on that CPI print. XRP, I'd like to see this move up soon. I'm sure it will. That remains to be seen though. Ethereum moving into this cycle low. You know the score by now, and if you don't, go back and watch the prior analysis. Same for Bitcoin. We are probably about 27 or less days, no, 27 to 30 days, say, until we get into this cycle low, and then we're going to go long and strong, as I keep saying. And the same is, of course, true for Coinbase, MicroStrategy, Riot Blockchain, and Marathon. So all of these I'm going to start scaling into as of the end of the first week of November. The UKX, is this a potential long coming out of here? Quite possibly. We need to see a bit more strength, a little bit more patience, maybe see the CPI print tomorrow, let the dust settle, and then I think we can entertain some longs from here, targeting the top of this wedge. Nice clean trend line from the Dow. Zoom out a bit so we can get some context. So again, I think we need a little bit more time to evolve, and then a breakout of here and we can target the top of this range. The exact same is of course true of the Nasdaq. Nice clean trend line, so a little bit more time for this to form a base or bleed a slightly lower, and then I think we can crack this and go. And here's the S&P. So it's looking a bit untidy. This is not following exactly, but I still think more or less we're going to do something like this. We know this cycle low's coming. I don't think we're going to fall off a cliff here. I don't think all those puts are going to end up being right. I think they're going to be fuel for an upside rally. So something like this, and then a breakout. More about getting into this window here at the end of the month, and then wherever we are, whether we're here and we break out or whether we're down here and we can look to buy a swing low, I think there's going to be some longs coming up. I think this market's going to catch a lot of people offside. Here's Tesla as well, working its way back down to the lows, but a trend line break. Let's extend this line out a bit so we can see what we're doing. There we go. So I think whenever we crack this, it'll be time to go long, and the same is true of Apple. We're still kind of bleeding, but a little bit more time into the end of the month, and I think we can crack this and go. Interesting look from the chart of truth. The 10-year yields, you can see this, they've sort of double top. They're waiting to hear from the Fed, aren't they? So maybe we'll get some hints from that from the minutes today. Maybe they're waiting to see the CPI print. We will see. The Fed has to be close to a pivot, in my opinion, but you know I've been wrong on this so far. So that's the analysis for today. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. Go ahead and follow me on Twitter if you want to see trade ideas and that sort of thing. Throw down in the comments if there's anything you want to see from me. And in the meantime, take care. All the best. Cheers. Bye.